Joumanna, what's the latest then on this deal?
Yeah, well, Tom, we've obviously been tracking it very closely throughout the course of the week. And you know that books were launched on Sunday to very strong initial demand. A lot of that came from the local investment community. And the book building process has continued throughout the course of the week, obviously opening up to some of that international and foreigner demand. We found out yesterday that the deal is looking to get priced at 27.25 reals per share. They're selling 1.55 billion shares. So in total, they would raise around $11.2 billion. Ballpark close to where they were looking to initially raise about $12 billion. And key this time around is how much interest this deal would have generated from the international community. Now, back in 2019, remember when that IPO launched in December 2019, there were a few questions about the ultimate market capitalization of Aramco and questions about future cash flows. This time around, it looks as though the deal, and from what our sources tell us, has actually garnered a lot of international interest. We don't know the full allocation yet, but from what we gather, investors have been drawn to Aramco's high dividend, and this has been a consistent policy out of Aramco the last few years. The dividend yield is attractive, and they're committed to providing that dividend, even if it means borrowing on the market. In addition to the fact that this time around, there seems to be a lot of demand coming through from Asia, from clients in India and China, which also underscores some of the recent developments in the geopolitical leaning of Saudi Arabia towards the east as well.
So the dividends pulling in those international buyers, creating some opportunity there. Joumanna, look, as you well know, this is it's a corporate story, but it's also a national story, a story around Saudi Arabia's funding ambitions. How does it tie into that? How does it position Saudi Arabia in terms of meeting some of those goals and targets?
Yes, absolutely. I think the funding aspect is key here. I mean, Aramco's #1 product obviously is still oil, but even the company itself is looking to make a transition from upstream to downstream company. Saudi Arabia have so far sold only about 2% of the company, so there's still a lot more that they can sell to generate more funding for the state. But this is part and parcel, of course, of the Saudi 2030 vision, a diversification of the Saudi Arabian economy away from being so hydrocarbon reliant and branching out into other sectors, things like tourism, hospitality, healthcare. And to do that requires a lot of spending outlays. For this year alone, they're estimated to have a $21 billion fiscal shortfall. So how do they meet that? In addition to selling down their stake in Aramco, we've also seen plenty of bond issuance this year out of Saudi Arabia, be it at the sovereign level, Sukuk, and even last week, Tom, they issued a bond in sterling directed at some of those sterling bond investors as well. So it tells you that they really are ramping up funding in light of where oil is trading, sitting at around $80. IMF estimate that the break-even level is $100, hence why we will see more issuance out of Saudi Arabia.